Good afternoon. This is Chris Brecher with the Chart Patterns Mastery / Simpler Trading free video. What's this about today? It's all about geopolitical stuff, but everybody talks about that. But in the grand scheme of things, I think this is because the markets are near new highs. You're starting to get buyback blackouts and the divergences are starting to matter. So what are we talking about in here? Well, number one, I know everybody and their mother is long certain things I'm not going to get exactly into, but I made it clear to everyone that the Dow Jones Commodity Index going almost to a new high might make the Fed less dovish, number one, on the left. The other thing that I was showing yesterday, the only reason bonds are up today is geopolitical risk. If you go through commodities, so bonds hate inflation. Go to when the inflation scare started, the supply chain shock with COVID. And then go look at TLT on the right and see when the high was. Not a coincidence. So rally in DJCI, sell off in TLT. Now, the one thing going for TLT, well, two things. Number one, political instability. Maybe the budget stuff. And it's at support. And it's where it was, well, it's already factoring in this going up to here. So it's already making a new low. So it's already sort of factoring in the Dow Jones Commodity Index having that kind of spike. When was this spike? So that was in 2022. Well, where was the low in the bonds back then? All the way here. So it is discounting a lot of it. At least that's about the only thing I can tell you that's good. Let's see how it acts if it calms down in the Mideast and the Dow Jones Commodities Index starts to sell off. Maybe that helps at TLT. Now, what else are we doing? Well, we traded the bear flags today. What are we talking about? Well, a bear flag with a horizontal bottom trend line, I've coined a Brecher ledge. When you go into this, I'll show you. And this was posted before it happened. I'm really into before it happened stuff. There you go. Sell off, and it worked. So, and then what happened? 15-minute chart got overbought on the bottom with a MACD at resistance. That was a short signal. Yeah, these things worked. And trend lines work. So just, very exciting to see that work. So how about the ES? Well, the ES had this kind of bear flag right here. So we picked up on that one as well. Trend lines. Look at that trend line. Work great. So, and we're going to continue these tomorrow. Now, how about on an hourly? Well, an hourly's oversold. And, we got that. You got some support in there. I know you have the Fed tomorrow. Is the Fed going to matter if commodities are up so much? Everybody wants to bet on the Fed. I don't know if that's the way to go. I think you should go on what the trend is, or let's put it this way, the bond stock relationship. Like I said, when the markets are in their buyback, when most companies can buy back stock, then on the right, the bond market negative divergence on a daily is not going to matter as much. When most of the companies get in the buyback blackout 5 weeks prior to earnings, the peak is like, let's say, July 15th. Then negative divergences are more likely to matter. Then negative news is more likely to matter. So that's what we're going to be watching the next couple of days. There'll still be some good long ideas, but I think now that you have these divergences, we definitely have to look for those bear flags intraday to jump on. So have a great night. Talk to you later. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.